right, ladies and gentlemen, on to our next conversation, later stage funding. And Anthony is going to be leading this conversation for us this afternoon. Thank you so much, Anthony.
Thank you very much, and good afternoon, everybody. I know we're coming to the end of what's been a fantastic 2 days at Africa Arena, but also extension from the weekend with the VC Young Conference as well. So thank you to Christoph and all the team for the fantastic week of activities and connections that have happened. Reflecting on the last couple of days and the conversation we had, we're often talking about early stage fundraising, mobilizing the early stage ideation through to seed to series funding. But a conversation that's also been happening over the last week or so is around that later stage funding and exits, particularly looking at the viability of IPOs as an exit route. And the panel I have with me today, which has been convened around a series of conversations we've been having with the Department of Trade UK government, is around exits, their viability within the context of Africa with relation to UK markets. On the weekend, we were at the VC Young Conference, and one of the things, a question we asked to the investors that were in the room was, what does an exit mean for you? And a couple of the statements we got were life or death. It means the progression of our companies, significant monetary return, a reality check, validation of the African VC thesis, light at the end of the tunnel, and lots of cash. So it was clearly something that is definitively quite important. The question is, what type of exits are viable within the ecosystem? And today on our panel, I'm going to let each member introduce themselves. We have what I'm calling the platform, the enabler, and the funder, who are this value chain for getting us to exits, particularly in the context of an IPO. But if I could ask from my right to left, quick introduction to yourself, organization, and your relation to the Africa tech ecosystem. Simon.
Yeah, perfect. Good afternoon, everybody. A pleasure to be here. So Simon Olsen, I'm a partner from Deloitte in London, and I lead our Africa IPO team. It's a team of about 30 people spread across the African continent and here, and we worked on over 25 IPOs of African businesses, both onto local exchanges, onto London, and onto some of the other international ones. So a pleasure to be here.
Thank you. Right up.
Hi, it's lovely to meet you all. My name is Frida Singoma. I am a fund manager at Octopus Investments. They're based in London. They're the biggest VC managers in the UK, one of the most active in Europe. My interest in Africa, I'm an African, and so I'm spreading and evangelizing how important investing in Africa is. I used to run an African equity portfolio in South Africa for Investec from 2008. And I'm here sort of hopefully waving the flag for more UK investments in Africa.
Thank you. Good afternoon, everyone. My name is Abi Ajayi. I'm responsible for primary markets at the London Stock Exchange for Middle East and Africa. I like that I was introduced as the platform, and truly we are a platform that converges 3 C's, capital for users and providers, so users like yourself, conversations, important conversations around the ecosystem on what it means to raise capital and how to use that capital, and then more importantly, the C for the communities like yourself. Africa being a critical part, and Africa Tech being a critical part of those communities, ensuring that we continue to help to shape the conversations around policy, ensuring that businesses are not at any point in time prioritizing profits over people.
Thank you very much, and thank you again for joining us. I want to get out the next kind of 20, 25 minutes, and then some questions from yourselves. I think the 3 things is really understanding your roles as the enablers at this kind of exit stage and route, key considerations that are valuable to anybody in the room, whether the funder or a founder, even if an exit isn't a viable opportunity, how things within the exit and IPO route will be valuable for early stage people to consider and getting best practice for their business. And then finally, how do people actually engage with you guys on a tangible basis, whether it's an individual or as a collective? And I think really for me, kind of to kick us off, is what is your experience over the last couple of weeks engaging with different conversations with people? What is the general sentiment appetite right now for an IPO exit? I asked myself the question being a founder, like, why are we talking about IPOs as an exit route right now within the African tech ecosystem when we are struggling to raise capital at the earlier stage? So I guess it'll be a quick question to all three of you, kind of what is that general sentiment or what are you seeing? And I guess that will lead on to talking about what we think of the longer term prospect in the market, which is really where we're playing. So I'll start with you, Simon.
Yeah, perfect. I think one of the things that struck me a lot over the last week or so, and actually has struck me over the last couple of years, is there are a lot of myths out there about IPO. And actually engaging with people and talking to people has helped start to dispel some of those myths. So things like, you need to be $1 billion plus to list in London. No, you don't. We have our AIM market. You can be a tenth of that size. Things like, it's going to take me years, it's going to be hugely expensive. In reality, it doesn't have to be. There are ways to do it faster and there are ways to do it more efficiently. The other thing that strikes me is there's a huge amount of tech business on the continent, and I've seen it as I've travelled around in recent months, I've seen it in the last week, that look good for the markets, and I think actually could find a very good home for themselves on the public markets, especially in today's world where private money can be a bit harder to get hold of.
Mm-hmm. And you've also been doing a series of masterclasses across the continent this year, introducing people in more depth to the IPO opportunity, is that correct? That's
correct. So we've done masterclasses in North, East, West and South. We've spoken to literally hundreds of businesses. So I'd like to think I have a good view on this topic. But look, there's a lot of interest there. And I think for a lot of business, actually, the capital markets could well be the right answer.
Fantastic. Okay, thank you. And Frida, you've obviously got extensive investment background in the UK and Africa before your time with Octopus, but now as well with Octopus, and you're here for multiple meetings and engagements. So if we talk about it from a sentiment market, from a deal flow pipeline, where are you as a later stage funder looking at IPOs, engaging with businesses at what stage that's helping you define and understand what appetite there is for this growth stage capital and exit vehicle?
So I run an AIM VCT. We basically invest in anything on AIM. I also co-run IHT portfolios. Again, it invests in AIM. I mean, there's massive appetite, I have to say.
Can I quickly... AIM.
AIM.
What is AIM and what is different to the stock exchange? Just as a quick one so our audience knows, because I'm always asking the question.
So AIM is considered the junior market on the London Stock Exchange. In fact, it's a growth market. So it's the platform for smaller companies to list, to get their footing on the London Stock Exchange as a listed company. Markets grow on AIM, so we usually get companies from less than sub 10 million market cap, some over $1 billion now if they've been on AIM a long time and grown over the years. It is the biggest growth market in Europe. The most active, and that's my playground. There's massive appetite at the moment. 2021, AIM market went up by about 33%. That's because the market for IPOs came back quite strongly during COVID. Before that, a lot of companies were going the private route. So we thought that was over and more companies would come to AIM. 2022 was quite good too. But then we had a dearth of IPOs in 2023. So it tailed off, obviously, once the geopolitical situation changed. But the pipeline is slow, but the demand is still there very strongly. I mean, we raised money last year. We raised money quickly this year. We closed it within 3.5 weeks. We're probably going to go out raising more money in a few months' time because there's still an appetite for people to invest in AIM. So as me and Abby were having a conversation earlier, is the more pipeline there is, the more money we can raise. So the pipeline literally determines how much money we can raise. So the demand is there. It's also worth noting that as much as AIM is a growth market, I know that the other VCT portfolios and a lot of the other AIM portfolios that we do run, about 40% is invested in tech, just to make that clear.
Okay, fantastic. Thank you. And Abby, London Stock Exchange, I think for a lot of people, it seems like a daunting, far away, very rare thing. Our businesses aren't ready. We're never going to be there at that scale in the African context. How are you engaging with early stage businesses in the ecosystem, and what is the message you're giving to them about engaging in the IPO process, or even getting to know yourselves at the exchange or other exchanges to think about it long term in the future?
Okay.
Not too long term, we hope.
So, I mean, I'd like to say first that we are a 300-year-old fintech and one that's constantly innovating. So, of course, there is that knowledge of where lots of businesses are at this point in time. And I think oftentimes the conversation is about what does good look like. And I'll be honest and upfront that the IPO perhaps is not for every company, but there are very good companies that have a significant opportunity to tread that path. What it gives you, apart from significant brand recognition, visibility, acquisition currency, institutionalization, the permanence of it that just allows you to be able to raise capital when and when you do need it. One thing which I'll say this year with respect to London, even in spite of muted markets, we had 250 follow-on offerings on the exchange, raising £20 billion. So existing businesses that I've listed in have been able to want to continue to tap the market. I've been asked this question that, do I have to be 50, 60, 70 million pounds or 200 million pound valued company before I can come to London? The answer is no. I've listed companies this year, 20 million pound valuation, all the way through to close to £1 billion. So I do think that, once you start to think about where you are in terms of your growth cycle, particularly for late-stage VCs and even growth-stage VCs, for you to identify the companies that have the right metrics, are growing quickly, perhaps even capital-intensive, that could start to think about this path as a viable exit option for you. So I'm happy to have a conversation. I have the conversations every day, in fact, because I'm a big Afrophile, as you can tell. So I'm always happy to have a conversation with companies and as well as potential, as well as VCs and funders in the ecosystem.
Fantastic. So I think so kind of getting that scene setting for where you guys come from, those perspectives. One of the things I'll ask, we've got some earlier stage founders here at Africa Arena, we've got some growth stage founders as well. And the question that keeps coming up to me is being IPO ready and what that means. And actually, a lot of what I've been hearing in the last week or two around IPO readiness, where it's governance, the regulatory considerations, where you're domiciled and those considerations, is actually a lot of that is just simply good business practice. And that actually our fundamentals businesses should have in place early, regardless of whether they're IPOing. Now, Simon, with your role, you work with companies to help them get IPO ready and support them as do you guys as well. What are the top three considerations founders who might be in the room here should be considering that will be best placed them to be IPO ready, but fundamentally are best practice for being investment and growth ready?
Yeah, no, it's something we have a lot of conversations with businesses about, actually. And I think I'll start by saying IPO readiness means a lot of different things to different businesses. There's no one-size-fits-all answer. So you need to invest some time with people like me, people like Abby, others in the ecosystem to understand what it's going to mean for your business. But to give you three broad principles, the first thing I'd say is you should just start to think through as a business, do I want to have IPO as an option? And if so, where might I IPO and what do I want my business to look like as I IPO? How am I going to sell my business to potential investors? And you do that reasonably early on because that then starts to frame your strategy for your business and your business plan because you want to be executing your business to maximize the IPO potential. The second thing I'd say is get your house in order. The step up to a public company is there in terms of things like governance and controls, in terms of what you're going to do for financial reporting. There is a step up of just the general environment of your business and what's demanded of it. So get your house in order. If you know that your books and records are a bit of a mess, if you know your finance function doesn't close its books right every month, if you know there's loads and loads of adjustments going through, try and get your house in order so that you're well run as a private business. And that will serve you well, not just in an IPO process, but any exit process. Because if the house isn't in order, that can cause you problems in any process. And then I think the third one is just spend, as I said, enough time with people who know what they're doing to understand what the IPO might look like for you. We're always very happy to run half-day or full-day workshops with businesses. We do it for free, just to take them through what an IPO might mean for them. And that will just start to help businesses get in their mind what does it mean for me? What are the potentially more difficult things? What are the longer lead time things? What should I be thinking about now? Once you get to 15 to 18 months out, then you might actually want to be doing some quite detailed readiness work. Before then, it's more around getting the thinking and the planning in place.
Fantastic. And I know you've got some fantastic slides and resources you can find in your masterclasses that speak to this. Frida, then from the funder side, and I guess if I was a founder in the room who was starting to get into that growth stage, and I want to start engaging with later stage capital allocators like yourself, what are the signals for you? What are the metrics? What is the stage as a business in growth that you're looking at to say, okay, this you would be potentially a consideration for an IPO from the perspective of Octopus?
The metrics that we look at obviously is their revenues and where they come from, the stability of their revenues, but we also look at the growth plan as well. The path to profitability is very important for us. But there are other markers that we look at, particularly with small businesses. It's usually founder CEOs. And one thing, because we're very open to doing early looks, so we give companies our time and we go through their business plan and then go back to them and the broker and let them know if they are IPO ready and whether the wider investment market would be interested. But what we always find with companies that skip that process is when you talk to the founder CEOs, they weren't prepared to be an IPO CEO. And that's where a lot of companies come unstuck. So they're worried about the movement of their share price. They're wondering how by incentivizing their staff through shares. Now the staff are worried about the share price changes, so it demotivates them. They're not sure what it's like to be a public company, so, oh my God, I have to face you twice a year. Really? I have to tell you more about my business than I thought I would ever have to. So they struggle with the transparency issue. So there are all those little things that it's in the details sometimes that you should really think about, particularly as a founder CEO. Prepare yourself, find a mentor, maybe take someone on the board that has public company experience. That would help, so that they can tell you what the process is like, but also help you through those times when things dip.
Mm-hmm. So when we say that these companies come on and they're not IPO ready, is that they're not IPO viable, or it's simply they've just not got the best practice in place when actually they could be right for it, they're just not prepared well enough?
Yes, so we see a lot of companies, early looks, that just haven't put the best practices in place. That's one thing. But then you get some companies that are simply not IPO companies. You know, they're, again, the stability of the revenues, where the revenues are sourced from, their IP is not protected. You know, once you're a public company, you are under daily scrutiny. Mm-hmm. And you need to be prepared for that. So we don't want to have a situation where we're finding out through a profit warning or whatever it is, or a scandal, that actually their IP wasn't protected, or in fact, they're paying their staff, like less than minimum wage. So all those little details are important to us, and those are the things we scrutinize when we think, are you IPO ready?
Okay, fantastic. I mean, London Stock Exchange, obviously you're here to promote the exchange, promote listing. I think a lot of people in the ecosystem be like, as I said before, are we ready for IPOs? Should we be considering it? But the reality is not many companies are, as we talk, IPO viable, shouldn't be using it. There are multiple options for how you might exit a business. So for you guys as a platform and as an enabler, how are you determining, or how are you helping the ecosystem determine who should or shouldn't IPO? So what are the kind of almost who shouldn't IPO, and how do you get them there to that determination? So we're only getting through that crop that should IPO and will be successful as a route of exit or further liquidity or getting more capital.
Okay. Thank you. I think one thing to just say as an exchange, we are investing time across the markets that make sense to us. I mean, this is my third time in South Africa this year, mostly in partnership on sort of capacity building, getting people to ask the questions around what does good look like, am I ready, what are the things I need to be thinking about in 3 to 5 years. And when people ask me that, okay, what sort of business am I in, I almost say, look, I'm a tech company that sells a lifestyle business, because it takes a while. There's a permanence to the nature of what it is that I'm telling you about, because then once you are part of what you call this elite group, then one, you can speak to the fact that one, you're transparent in terms of how your business practices are being run. You put the governance, the right governance structure in place, and you have a business model that allows you to grow, as well as a platform that supports that growth opportunity. I think, in addition, and I was saying that we're a 300-year-old fintech, we continue to innovate, just like most of you companies that are in here. And one of the things that we're doing is we've started engaging with companies at a much more earlier stage. So we come up with a strategy called a funding continuum, where we are backing companies as far back as early stage through what we call flow. And so for UK companies, so if you're looking to raise Series A and above, so there's a platform for you to raise money there. But the one bang in the middle where, for example, a lot of late stage or even sort of growth stage VCs are thinking about is, how do I sort of trade out of my secondaries? How do I think about exits? We're investing in what is called the first regulated crossover market, such that companies, for example, can use that platform on an intermittent basis to sell down and use it even as a platform to attract the best talents, because most companies will give employees ESOPs and they have to wait for a big trade sale or perhaps an IPO. But imagine that there's a platform that allows you on an intermittent basis, you're holding on to the shares and you can trade off. You can use a public market infrastructure to determine, through an auction process, to determine the price, and you can start to create shareholders way before you think about a listing. So you can start to use that platform as a training wheel to assess whether your public market is right for you. So being on that platform, you don't necessarily have to sort of think about a public market offering if that's not the way for you. And then, of course, on the right side, we're doing the IPOs where we're making it easier for companies to be able to come to the London Stock Exchange as much as possible, with all of these sort of reforms, improvements in terms of how research is being done. And more importantly, we're doing a lot of work in terms of equitization of the market.
Fantastic. I've got a couple more questions I do want to ask you guys. Before I do, I'd love to open it up to the audience to get a general sense on sentiments and views on IPOs. So please do start thinking about one or two questions you might have. Before I do, two questions I want to talk about: costs and timelines of an IPO, because I always hear that this is a way too expensive process for us. And as well as that is, we do have London, and as you can tell from my accent, I am from the UK and a big champion and promoter of the UK. But there are exchanges around the world. People talk about the US is where I should be going and get big valuations over there. But we talked about this earlier. Beyond the costs of listing somewhere, actually, what is the priorities for consideration on listing that founders should be and funders should be thinking about for their portfolio companies?
Yeah, I would say for most businesses, a mistake I see often is people look at process and cost in determining whether to IPO, and indeed then which market on which to IPO if they do decide to. You've got to look more at the fundamentals. So where are the investors that are likely to invest in me based? Where are the peer groups, so listed companies that look like to me, where are they based? Where am I going to be best understood? Frankly, where do I want my business to be listed? Because that's where I'm going to have to spend my time. You quite well often end up with a headquarters there. So where do I want to do business? You should look at those factors primarily. That should drive where you list. Mm-hmm. Process you then have to look at, and cost you need to understand. And there are things you can do to try and minimise the risk on your costs, such as the early looks that Fred was mentioning, where you engage early with investors to try and understand appetite and, importantly, valuation. But I would reiterate, for a well-prepared business, the process can be done in 6 months, and it can be done relatively cheaply. I won't give you a range of costs. It varies enormously by company. But,
can you give us some insight to a cost, and even give us an example, just so people can get an idea of what ballpark we're playing in?
Bearing in mind you've got accountants, lawyers, bankers involved. I have seen people do IPOs for less than $500,000.
Okay.
In terms of cost.
That's an upfront cost. That's a lifetime cost.
That's the cost of the transaction.
Yeah.
There is also a cost of being listed. But I think the thing that people miss out all the time is once you are on the exchange, you're ready to go in terms of further fundraisings and further transactions. So you've become a member of the club, right? It may take you 6 months to do the first offering, but if you wanted to do a follow-on fundraising, and there's plenty of examples of this, you can do follow-on fundraisings in 72 hours. You know, the platform's there, you're on the platform, you can do them really quickly. If you want to do M&A, you can do it really quickly. I think that's what people miss. You know, if you're a private business, every time you do a round, it's 3 or 4 months now. You can't do them in 3 or 4 weeks like you could do in the days of free money. It's 3 or 4 months, you've got fees every single time. You don't get that once you are listed. So, you know, there's a bigger, maybe the initial membership of the listed company club is higher, but once you're there, it's a lot easier and cheaper.
So, Frida, I'm going to come to you with my final question before we go to the audience. Obviously, we've just talked about new funding that comes beyond IPO, and Nick told Charlie at the back of the room from the UK Investment Association, who's been a fantastic steward for us understanding those markets, and someone you should definitely have a chat with afterwards if you understand what comes from a capital allocator to IPO and above. But Frida, for you guys, if we kind of come back down the value chain, who are the type of investors you're engaging with to look for a prospective portfolio company? So if we've got investors in the room right now, can understand who are the type of investors you're trying to speak with, which is helping you identify prospective companies that might list that you would want to invest in.
So, sorry, talk about what type of investors?
What type of investors are you engaging with who help you source deal flow? So the kind of investors, that's portfolio companies you might invest in.
Yeah, I mean, we get our deal flow primarily from brokers. And nomads, they're the ones that bring them through. So in the UK, there have been issues of collusion amongst funds, so we can't speak to our fellow portfolio managers about what they're seeing, but we all tend to see the same thing. Particularly if you are at a certain level, which we are at Octopus in terms of venture capital trusts that invest in AIM, then there's a small sort of group of us, we too tend to see the same thing. So our deal flow primarily comes from brokers and nomads.
And we're not talking about somebody on Bali on a laptop here of nomads, are we? What are these people's profiles or backgrounds or experience?
The brokers and nomads. So the brokers are a part of the sort of like, I guess, investment ecosystem. They're the people that you would be introduced to as well as the nomads. So they're nominated advisors who would basically hold your hand and introduce you to potential investors. The first process obviously goes with people like, go through Simon and lawyers, and then they tend to have the relationships with brokers and then recommend a broker that would actually be interested in covering your business. Research, so you need corporate research to go with it, because we on the public side, on the IPO side, we don't tend to create most of the models ourselves. The models are actually created on the broker side. Then we then take their financial estimates and then make our own valuation from there. So you need a broker who basically covers whatever side of tech or industry that you're in, who understands the region, who would understand your business, because they are your mouthpiece to the investors. So that is a critical part that you can't sidestep.
And a whole new category that I've been learning about that sits in that investment value chain as well that we need to consider. Thank you. So I'm conscious I've got we may get played off shortly with the music, but I just want to go to the audience for a couple questions. Does anybody have any questions for any of our panelists, or a general comment? Yes, can see a hand up, just can't see who exactly it is.
Hi, it's Imran Jiva from Stratec Investments. I'm just curious, perhaps this was mentioned and I missed it, but what is the thinking around deepening the IPO capital markets on the African continent? Because it seems like there's a big mismatch of different territories and different depth of capital. So, for example, the JSE has very liquid capital markets, but we don't have very exciting companies to IPO. And the rest of the continent has more interesting companies. They're not going to IPO in the JSE, then they have to go to either the UK or America, and it's kind of orphaned on those exchanges. So it just seems like there needs to be some kind of initiative to keep like a pan-African IPO market that all African exchanges are kind of connected to, perhaps single currency dollarized, and it can't exist in any single country, right? Because there's not enough depth in any single African country. So I just want to know, is there such an initiative underway? How's it going to look? Thoughts around that?
Thank you for the question.
Yes.
Abby.
Look, thank you for that question. I think I'm a big fan of connected markets and fungibility of markets. I think it's quite important. And in the countries that make sense and the regions that make sense, so we're spending a lot of time on capacity building, as I mentioned. So I'm in Nigeria, I'm in Kenya, I'm South Africa, I'm in Morocco, I'm in Egypt. And across these markets, what we're speaking to, and what we're speaking to is around partnership. And what London represents to the exchanges there is an extended shopping window for foreign investors into those markets. You may not know this, outside of South Africa, London represents the biggest aggregation of African corporates anywhere else in the world. So it's 52 odd companies are dual listed between London and South Africa here. And whilst I would perhaps say this, it's an obvious problem which of course requires a call to action and needs a bit more rethinking. There's a capital formation issue in a lot of these markets, whereas in South Africa there's a capital dislocation issue. And I think we're starting to have that conversation because then it's not a capital formation issue we have here in South Africa, it's capital dislocation. Too many small funds all across not coming together to fund businesses. And I think, again, this is one of several conversations, and I'm looking now for Tracy in the room. I'll probably let her have the mic because this is one of the things she's been sort of pushing aggressively in terms of how markets can get coordinated, where you can see effective capital flow to finance businesses. When you really step back to startups and scale-ups, ultimately what you see behind there are sort of fundamental businesses that have an impact on the continent. And for me, when people talk about impact, they say any business that is effectively feeding 10 families on the continent is impact. That's how I say it. So I think having a rethink and having sort of regulators and various sort of stakeholders start to think about how we push and solve the capital formation problems in specific markets, and then here in South Africa, how we fix that capital dislocation issue, I think is quite key. I don't know who's got the mic in the room. I think I've seen Tracy, so she can speak to that, what she's doing on there.
We'll go to Tracy, then we'll have time for one more question, I think.
Sure, thanks for that. I think the point I'd say too, and given the work we're doing, is it's not a binary one exchange over the other. It's more an and/or. And I think we recognize, part of the work that I do is also talk to the asset management side of the value chain. We still need local capital markets because we need institutions to buy local products. And we need them to buy better local products. So we're still supporting local markets. But if you look at the valuation uplift, particularly of what we call the megatrons, which are our new telcos, most of them that have listed locally are not getting the uplift in value that they need. They need to be locally listed. They need to be in a portfolio of a local asset manager's holdings. But most importantly, they need to be available on an international exchange to realize their valuation. And that may not be entirely, it might be in part. So hopefully we'll see a few more interesting spin-offs, but definitely it's an and/or. It's not a binary either or. Thank you.
Fantastic.
Thanks.
So I have time for one more question, then wrapping up, Mark. Does anybody have another question? Yes, gentleman there on the left.
Thank you, Brian from E Squared. Not sure if Abby or Tracy would like to take this one, but it's more around the prevailing sentiment where we're seeing a number of delistings. What do we think needs to happen to see less companies delisting from exchanges? Is it a function of tough economic environment, tough macro environment, and that's why this is happening? Or are there some behaviors that, I don't know, could change from the investor side or the regulator side that will make it easier for management teams to, and other shareholders or key shareholders, and we are to try and, I guess, encourage their companies and corporates to maintain listings and push more for, more listings as opposed to remaining being businesses within the private domain as opposed to the public domain.
Okay. I would take that question in part, and I think Frida perhaps will have one recent example to talk about.
We'll do a quick 1 minute from each person.
Yes,
I'll
okay.
comment before we wrap up.
Quick. So if you look at markets are in cycles, right? Which means that, capital also needs to be recycled across. Every now and then, what we are as an exchange is a platform. Again, users and providers. And putting a company on the exchange gives the visibility, means that, private equity will, from time to time, see hidden value in certain companies and want to take it private, get some value and bring it back. I'm not, when you see delistings, it's, of course, you see certain times that you see a lot of delistings, that you also see a lot of companies come back to the market. The point that I'm saying to you is that capital is not being destroyed. It's coming back in some shape or form. So I'm less worried about the point when people are saying there are lots of delistings, so long as the capital is being recycled, and that's what we need on exchanges.
Yeah, I mean, some of the delistings that we've seen is our companies being taken private, and that's not because the management team decided or board decided that they wanted to be. We've had quite a few companies taken out. When markets are bad, valuations are low. Private equity still have deep pockets at the moment, so this is like a feasting ground for them. So a lot of private equity are literally hunting companies on the exchange. I mean, sometimes it's for okay valuations, there's a takeout premium. Sometimes we're disappointed even though we get that takeout premium because we still believe that the company should remain public. But if our CEOs are offered and the board's offered a price that they can't refuse, they take it. So I think a lot of it's not negative, and some of them do come back. As Abby said, we've currently got a private company in our portfolio. It's a SaaS business. We've owned it for about 10 years. They were taken out by private equity. They have told us they have an intention to come back on the market in 2 years' time, and they'll be a much bigger business when they come back on the market.
Simon, you're putting them on the pitch. Are you also getting them off the pitch at half-time and then putting them back on again?
I mean, sadly, the IPO markets haven't been great for the last 2 years, and that's one of the reasons we see quite a bit of delisting chatter. The other two things, I think you need to unpack the delistings, and this applies to the JSE and others. When we look at things being taken over, when we look at things being strategically acquired, when we look at even on things going bust, frankly, that is normal capital markets activity. What worries me is when things are delisting just because they don't like being private. And we're not seeing too much of that, and where we are seeing it tends to be small caps, like really small caps, either where the business has failed or where, frankly, they were probably too small to come on in the first place. A lot of those came on the noughties, and we're now seeing them cycle out. So I think that's fine. So I'm not dismissing the problem, but it's not quite as bad as sometimes the headlines would make you believe for those factors. The other thing I think we are going to see play through is if we look internationally, other than in the last 18 months, for a decade before that, there was lots of free money privately, right? We've had ultra low interest rates, so international investors have had very deep pockets. And loads of businesses we've been talking to over the last decade, the mantra's been, well, just raise money privately, you can do it in a fortnight, get to real scale, then IPO. So if you look at some of the big tech businesses coming to London, they've been coming in at multiple $1 billion, some of them, because they could just get free private money. That is changing now, and we're not really seeing that come through, but it will.
Perfect, thank you. So thank you for the question. So I know I have to wrap up now. A couple observations from this I'll take away, and then I'm going to come to you and ask you just how can the audience and the ecosystem engage with you? What are the touch points you want to offer versus what you'd like to speak to? There is a market for IPOs on various ways to list, but it's a small pool of companies that should be doing it. And being IPO ready is actually being best practice business ready for scale and growth in any shape or form, and it should be looked at to help your business grow. And there's access to support. You're doing free masterclasses, LSE is engaging with other entities and organizations to do various programs, so is that support out there for it? And Tracy Austin, who spoke just now with the Department in Trade, are doing a lot of work for mobilizing key stakeholders, including ourselves over the last week or so, so thank you to them. But yeah, quick word from each of you for how people can engage with you with relation to the topic today. Simon.
Yeah, I mean, I would generally say take good advice, but also take free advice that's available. As I said earlier, I'm happy to spend half a day with a business doing a workshop, working through with them what an IPO would mean to me. You can probably get lawyers to do similar. You'll be able to get investment banks to do similar, and I'm sure the exchange would. So do that. Do learning in your own circumstance. I think that's really powerful for anyone who's contemplating IPO.
And people can look out for your masterclasses again in 2024.
Yeah, and indeed come to masterclasses. There are events we run. As I said, I'm well travelled, happy to meet on the continent, happy to meet in London.
Excellent. Frida.
I guess you can find me on LinkedIn. As I mentioned earlier, we're open to seeing early looks. They'll come through the London Stock Exchange, so harass Abby if
You're outsourcing your ask and your engagement. I like it.
If you are keen on doing an early look in London, he'll definitely pass on the details.
Abby, closing remarks to you.
Good. Thank you, everyone. I think IPOs are a very useful way for you to democratize ownership. I'm a big fan of national champions allowing their customers who supported them from the get-go to benefit in their sort of economic growth. So taking your public companies private, I'm sorry, I beg your pardon, taking your companies public is a very useful way for you to allow those customers that have helped you get a product market fit and actually supported you by buying your products and going forward. So do please reach out to me. I'm always happy to have a conversation and also to connect you as appropriate.
Perfect. Well, thank you very much to my panelists for joining us and for the question of the audience, and we look forward to seeing you next time. Hopefully a few new IPO stories to share. So thank you, everybody.
Fantastic. Thank you so much, Anthony. What a great conversation. Thank you, panelists.
Thank you.
You can definitely get off the stage, and we'll make some space for some of our pitchers who are going to be joining us. A great conversation indeed. I've got to say, before you started, the word IPO was really, really intimidating. But I love how Anthony put it together, saying that IPO really is actually really good business practice. And that's something that we can take away from this conversation.